Hey guys, how's it going? Happy Friday afternoon. Amir Gurami with MCF Mortgage. I'm here with my partner in crime, Ray Cruz. We're here for episode 6 of the Mortgage Intelligently University, referred to it as the MIU. And today we're going to discuss a really awesome topic. This is something that we're really excited about. We just rolled out this new loan product, which is going to do wonders for anyone who is in the housing, looking to buy a house right now, and for our realtor partners who are helping those families look for a home. So today's topic is going to be bridge loan financing. Okay, why is this important? I'm gonna describe that to you really quickly, and then I'm gonna shoot it over to Ray for Ray to get into the specifics of it. So you know that the market is super competitive right now. It is next to impossible. It is impossible to go buy a house contingent on your house selling. And this is a problem when you have all this trapped equity in your house that you want to use to purchase the next house. So it's next to impossible to buy a house contingent on another one, okay? Or in some cases, you don't want to sell your house to relieve that equity, get that equity out of it until you find another house because you don't know where you're going to end up. I mean, the housing market is tight. So in regards to those two problems, we came out with our MCF exclusive bridge product to meet those concerns. And Ray, get us the details. How does it work?
And I'm sitting here listening to you, Amir, and I have a smile, like I'm holding my smile back because I'm so excited about this product. I mean,
right.
This is a game changer, right? This is a product that it's a real game changer for our clients, right? So we've been working on it for months, and it's not officially rolled out, but it'll be rolled out here very shortly. And it is our MCF exclusive bridge product, Amir. And it's exactly what it says, and it's actually to do exactly what you said to do, where our clients can now submit offers non-contingent on them selling their house. They can actually tap into their equity in their home and use that equity to purchase the house of their dreams, right? So here's a simple sort of example to sort of make it easy for everybody to understand. Borrower owns a current property. Let's say that property is valued at $500,000. They owe $300,000 on that house, right? They need that money they need to sell that house for the down payment, to get the down payment to move on and purchase their next home. What we'll do is we will use a bridge loan to provide them up to 90% of the value of their current home. Okay, so they can borrow 80%, they can borrow 90%, depending on how much money they want to put down on their new home, right? They may not want to put all that money, right, towards the new home. They may only want to put 10% down or 20% or 25% down, whatever those numbers are, whatever, right? But in essence, they can pull that 20% if that's what they choose to do from their current home and use that money as a down payment on the home that they're purchasing, therefore eliminating the contingency of them having to sell their home. And what we'll do is we'll have them basically take out this bridge loan. The bridge loan will be attached to their current home, right? And once their current home sells, then that bridge loan gets paid off, right? So it's an amazing product. It opens up so many doors to so many clients that, prior to having the bridge product, they wouldn't be able to purchase a product or a home today because there's no product out there right now that offers this type of financing that taps into the equity of their current home, which they'll be able to use. So I'm super excited about it. Can't wait until that.
Ray, let me ask you a question. So this product, I know it's a coming attraction. It'll be out in the next week or 2 weeks, but if they have a first mortgage on it already, does it affect their first mortgage?
Not at all. So this bridge loan will basically go in second lien position on their current mortgage that they have in place.
Okay, so that's good. So like if someone has an amazing rate on their first mortgage product, they could keep it because Absolutely. They may not be able to buy a house. Maybe they put 50 offers down and none of them get approved. So with the bridge loan, you're not touching the first loan.
We don't touch, correct. We don't touch their first mortgage whatsoever. They keep it. And we're just basically applying a temporary loan, if you will, right? So they can have funds for the down payment in order to move forward with their purchase.
And then is there any specific requirements in terms of, is it almost like a true loan from beginning to end, or is it abbreviated, or what's different?
Great question, Amir. So we will underwrite both loans at the same time, right? Simultaneously. So the bridge loan does have, because it is a bridge, right? We will need to order an appraisal on their current property so we can get a value estimate, right, on that property and know how much we can let them borrow up to. So so we do cap it at a 90% loan to value on their existing property, which, it's pretty high, should give them enough cash to pull out, depending obviously on what that mortgage first lien is that they have.
Right.
But definitely should give them the funds required for them to be able to move forward with their purchase.
Okay. So this was something that, when would you recommend someone to start thinking about the bridge product? Is it, you guys have this discussion at the pre-approval stage, in the initial stage, or, when does it come up?
I would say immediately. So as soon as you're once you're having that conversation with the client and the client tells you, hey, look, I can't purchase this product, or move forward until I sell my house, or a realtor partner, right? They call you and say, hey, I have a client, I need to sell their house, I can't move. They can't win any offers because their offers are all contingent on them selling their house. I mean, this is the fix for that, right? So as soon as, once you have that initial conversation with a client, you see that they already have a home and they're wanting to pull that equity from their house, right? This essentially allows them to, not worry about movers, not worry about where am I going to live if I don't sell my house, right? I mean, there's so many aspects that go into the entire transaction that it puts them in a place where they have peace of mind.
So Ray, let me ask you another question. Now, this, I think, our audience may have not heard, this is underwritten at the same time as the purchase transaction. Correct. So when they're getting ready to purchase a home, they would apply for both loans simultaneously, correct?
Absolutely. I mean, essentially you apply for one loan, right? However, we internally are doing two transactions, right? We're doing the transaction for the purchase, for the actual purchase for their new home, and then we're doing the transaction for the bridge loan as well.
Got it. Okay. Now, what's the difference between this and, let's say, them going and getting a HELOC?
That's a great question. So they can do the HELOC, right? The problem with them doing a HELOC a lot of times is that when they go and apply for a HELOC right away, right? That HELOC will typically have some sort of prepayment penalty that you have to hold on to that HELOC for a certain period of time, right? Or the closing costs that they don't pay for, or they pay for, but they include them in the loan. You have to hold on to that loan for X number of years, right? But the biggest benefit, really, Amir, is that it's in conjunction with the transaction, right? So when you're purchasing that, when you're doing the HELOC, right? That HELOC, as you and I know, can take months to close from start to finish. That's
especially now.
That's problem number one. Problem number two is, HELOCs are not allowed on investment property. So technically, when you're taking out a HELOC on a mortgage or for a property that you will not occupy, I'm not saying you are, but you could potentially be committing mortgage fraud, right? Because you're in essence taking out a HELOC on a property that you don't intend to occupy for longer than 60 days or even 90 days, right?
Right.
So I highly, I would advise people to basically just, look at read their loan applications when they are applying for HELOCs and so forth to ensure that they're not, doing anything wrong on their end. So with the bridge loan, there's no worries in regards to that because it's in conjunction with the purchase.
So I think that's really important because it being in conjunction, a HELOC, once you take it out, you've borrowed that money. So now interest is being accrued on. If you took out $200,000, you're paying interest on $200,000. On our bridge product, it's really a bridge. Bridge is short-term financing. It's if this transaction doesn't close, the bridge doesn't finalize.
Right.
So this transaction, you're not bearing extra interest, bearing extra costs. What if it takes right now in our current marketplace, takes sometimes borrowers 6-7 months before their offer is ratified on a house that they like. So, imagine 6 or 7 months of interest. One last question I have for you, Ray,
Sure.
is the bridge calculated in their debt to income ratio?
It is. So at the end of the day, they do have to qualify to carry basically all of the debt, right? They have to qualify to carry their current debt, whatever the payment would be on that bridge, and the new loan, right? They do have to be able to qualify in order to carry those debts. Absolutely. So because
Right.
remember, it's underwritten. It's still a debt that they're carrying, right?
Right.
And
Yeah.
they may sell their home within 6 months or less, or they may not, right? Or the clients may not. So therefore, yes, absolutely, it is definitely underwritten with them carrying all three mortgages or all three payments.
All three payments. So all three payments are their new mortgage, their current mortgage, and the bridge.
Absolutely.
Okay. Got it. Yeah, this is exciting news. I mean, I think this is gonna allow a lot of people to shop freely without the fear of what's going to happen. I'm not going to sell until, because there's that holding game happens a lot. People are afraid to sell because they're afraid to find something, or they're not going to find something. I'm sorry. So I think it's going to be an amazing tool that we're going to be able to offer our partners. When do you anticipate? I know you said it's a coming attraction, but we're finalizing it right now. When do you think?
We're literally working through the final stages of it. I mean, I would anticipate for us to have it actually live and rolled out to our clients within 2 weeks.
All right, that's wonderful. All right, guys. So exciting news. Bridge financing. Ray gave you guys kind of the bird's eye view description of how it is, big picture of how it works. If you have any questions, either call Ray or myself and we'll discuss your specific needs. But this is really awesome news. It's a great product. It's taken a while for us to get it here, but I think the timing is perfect for it. Guys, that does it with this episode. Thank you again for joining us. Ray, as always, thanks for the great info.
Thank you. And I just say to all of our realtor partners, this is going to be a great tool for you. It's going to give you a lot of new sales that you didn't have before.
Absolutely. So, guys, use the bridge product. It's available, and make it an amazing Q4 with our product. I think it'll help you, as Ray said, tremendously. Talk to you guys in the next episode. Take good care.
Have a great weekend, everyone.